Hello everyone, welcome back. In today's video, I'm going to be going over Realty Income Corporation. I'm going to be speaking about the dividend and pretty much an overview of the company. This is a very popular company among dividend investors for several reasons. And before we begin, if you do enjoy content like this and want to see more videos like this, please consider liking and subscribing for future content. So Realty Income Corporation, the full name is Realty Income Corp, and they have a basic moniker of the monthly dividend company. The company is an S&P 500 company, and it is a member of the S&P 500 Dividend Aristocrats Index. So that basically means that a company has 25 consistent years of raising their dividend. And speaking of the dividend is quite high. It is a real estate investment trust, and they are required to basically pay out most of their earnings via a dividend. It currently pays about a 5.25% dividend. That is going to be your yield. And as the moniker, when it is, of course, the monthly dividend company, so it does pay around the middle of every single month consistently, and it's done that, as it said, for a couple of decades there. Really consistent dividend, and that is part of the reason why dividend investors like it, because it pays so consistently every single month. This is a good stock for certain people that want basically like a consistent paycheck coming in or monthly income to pay their bills. So as I said before, the company is structured as a REIT, and its monthly dividends are supported from the cash flow of over 13,250 real estate properties, primarily owned under long-term net lease agreements with commercial clients. So as the company's name suggests, it is the monthly dividend company. So the entire intent of the company is to basically have an increasing dividend over time. It delivers dependable monthly dividends that increase over time. So you have a company that is committed to a dividend, and not only a dividend yield, but also consistently increasing that dividend over time. Now, I do want to put a slight caveat on that. If we do look at the cash amount here in this column, you will see the dividend absolutely does increase year over year, quarter to quarter. But the thing is, it doesn't increase a lot. So don't get caught up that this is a dividend growth company. It's really not so much of a dividend growth company. It does offer a growing dividend, but it is a slowly growing dividend over time. You're not going to see major 12, 13, 14% yield returns or dividend growth on your dividends year over year. You're going to see slight increases. Sometimes they increase the dividend by a half a penny every quarter or so. So it's not going to be a huge increase, but as the company did say, they do increase their dividend consistently over time. And I could just keep going back and back here, and you'll see that it does increase. So an overview of how this REIT operates. As I said before, it does have over 13,000 properties with a great occupancy rate over 98%. So that basically means a lot of their properties don't go unoccupied. There's very little vacancy rate there, which you'd want to see as a REIT or real estate company, because as you can imagine, if a property is not occupied, it is just sitting there and is not earning you any income at all, which is, of course, not good for a company. It has over 1,300 different clients, and it services 85 separate industries. So what basically this means is that it has many properties, a low vacancy rate, a vast, diverse list of clients, and also services a diverse set of industries. And you'll see properties serviced by Realty Income Corp in every single U.S. state and also the territory of Puerto Rico. And if you go to this page, you can see how many properties each place has. Like Puerto Rico has 6, Alaska has 6, Florida has 886, which is quite substantial there. And it also is an international company, although it doesn't really expand to too many different countries. It does have properties in the United Kingdom, Spain, and Italy. So you are going to see a bit of international diversification there, and you're going to see properties in every single U.S. state and some territories. And before we get into the specifics of the holdings, the overview of the assets is that it consists of retail, industrial, and agricultural assets that generate stable cash flow and enables us to deliver consistent monthly dividends for our shareholders. So as I said before, our portfolio includes high quality real estate in 50 states, as well as Puerto Rico, the United Kingdom, Spain, Italy, and Ireland. I forgot to mention that one before. And their geographic footprint, they say, continues to expand. So an overview of their industries. This is the top 10 industries as a proportion of the total rent. So the majority of that rent comes from really well-established industries that have consistent customer flow or industrial use. So you see grocery stores are their number one, followed by convenience stores, dollar stores, drug stores, home improvement, both types of restaurants, both quick service and casual dining, automotive service, health and fitness, and general merchandise. So you're not really going to see any really, I guess you could say, employee-centric real estate properties. So this company isn't devoted to basically buying a property or contracting it under lease and then providing employees basically workspace. This is very customer centric. So looking at an overview of the top 20 clients, you see a very diverse list of different companies, and they all operate in different segments. So you see something like Walgreens and Dollar General, which are basically like consumer stores. You also see things like Wynn Resorts, which is more so of a like discretionary. You see something like FedEx, which is more so industrial. Basically, you see a very good diverse amount of different properties that will consistently generate you income for the most part. And I think a good thing about this list of clients is that you don't see, again, employee-centric places. So you're not going to see employees showing up to these places for work in the sense that that's all that they're there for. Of course, employees work at Walgreens and Dollar General, but these aren't places for employees to go to work and do like a back office job, which is very important because I think a lot of people became concerned with commercial real estate regarding work from home, but you don't really have to worry about work from home with these places because customers are going to these places. So they're going to generally have a consistent supply of income because customers are going to constantly go there. Now, this doesn't mean that some of these places aren't at risk to close down. Like, of course, Walgreens did have some trouble. They were closing some places, but it isn't too bad overall. And again, this is a very diverse number of properties, and you are going to see them in a diverse number of states. So now I'm going to show you a back test about how this performed against another real estate asset, an ETF that tracks the real estate market, and this goes back to January 2005. So this definitely had some varying economic conditions, and if we scroll down, I did the comparison against the Vanguard Real Estate ETF, which basically tracks the overall real estate market, and you see that Realty Income Corp pretty much blew away the average of the entire industry. If we look at the Vanguard Real Estate ETF, which tracks the real estate market, you see that Realty Income Corp definitely performed quite a bit better than an ETF designed to track the real estate market. Now, of course, you are going to see a bit of a standard deviation. You're going to see quite a bit of drop in some regards compared to the ETF, and that's just due to an average of companies not being as volatile as a single company. So if you do hold this stock or choose to hold this stock, you probably will see greater volatility over time, but past performance is not indicative of future success. But we do see that a Realty Income did perform better, at least over the period of this backtest. And so as far as saying, should you invest in this, I can't really make an opinion for you regarding that. This is not the kind of channel that this is. This is more so just an overview of the company. But I do think that if you are looking for monthly income or you just want to hold a different performing asset than the general S&P 500. Again, because this is a real estate investment trust, they perform a bit different than the overall market. Realty Income Corp is definitely something that you should consider. Maybe you already do invest in this as a dividend investor, or maybe you're just looking for different REITs for income purposes. Realty Income, of course, has been around a really long time, so you can look at how this company performed during different economic times. So that's going to be it for this video. Again, if you did appreciate this content and want to see more content like it, please like and subscribe for future content. And I do hope that you did get a good overview of the company in this video, and I'll catch you in the next video.